All right, hello and welcome guys. This is Yasir Khan, and in today's video I will be talking about how to invest in stocks for, consistent income, okay? And a lot of people go about this the wrong way, which is why I've decided to create this video, and I'll try to keep everything as simple as possible for you. So I will only give you the action steps you need to take in order to get the results you want. Nothing technical, nothing crazy. Everything will be systematic and simple to understand. So let's get started. The first thing to understand is that there's a big difference between regular stocks and dividend stocks. Okay, regular stocks are stocks in a shares of ownership in a company, which just go up or down in value. So you buy a regular stock and you hope that it goes up in value, and then you can hopefully sell it and make a little bit of profit. On the other hand, a dividend stock is normally a share of an older mature company, which has been paying out dividends to stockholders. So instead of you relying just on the price of the stock going up, for dividend stocks you can just buy and hold the stock literally forever if you select the right company, because that company will send you checks in the mail or online transfers of dividends, either monthly or every quarter or every year, depending on the company that you invest in. Okay, so this is very important to understand. There's a huge difference between regular stocks and dividend stocks. Okay, most people, because they want to sell the stocks in the short term, they go for regular stocks. Okay, some people don't even know that there is such a thing as dividend stock. Okay, they just think that I'll buy a stock for $10, wait a couple of years, and then sell it for 50 maybe, and then I have a profit of $40. But here's the thing: when you sell a regular stock to make a profit, the first thing that happens is you get taxed on the gains, the capital gains, right? Because that $40 that you generated in profit is now your income. Okay, so you'll get taxed on it. The second thing that happens is that you lose the asset, right? You sell the stock and then you just have cash, and then you have to find another investment to invest in. So when people do this becomes a never-ending cycle, and you end up paying a lot in taxes, and at the end of the day you don't have any assets. So if you are thinking about investing in regular stocks, I would suggest that you reconsider. Okay, if you, on the other hand, start investing in dividend stocks, dividend paying stocks, then the results that you will get are much they're just better, because you don't have to sell the asset to make income, and because the company that you invest in will keep sending you dividend checks. Okay, so very important. So in this video we will just be talking about dividend stocks for the reasons I just mentioned. Now, the three criteria that I have to invest in a dividend stock are very, very simple. The first thing is I need to make sure that the stock, the company that I want to purchase the stock of is valuable to the economy. Okay, which means that it is integral to the economy. Things like utility companies, power generation companies, all these kinds of companies where consumers will pay for them, even if there's a recession, will have a very decent stock price, and you will not see dramatic increases or decreases in the stock price when you buy into it, which means that your risk is reduced. Because let's think about it. If you invest in a utilities company, for example, electricity, right? Even if there's a recession, people will keep paying for electricity, right? They're not gonna sit in a house with no electricity. On the other hand, when a recession hits, the entertainment stocks of entertainment companies take a huge hit, because, well, if people don't have a job, then they probably won't be spending too much on entertainment. Can you see the difference here? Okay, so the first thing is that the stock should be of a company which is integral to society. Okay, think utilities. I have, for the most part, I've almost always invested in utilities sector, and it has given me a decent chunk in profit. Okay, the second thing to understand is that you have to buy at a low price. I know everyone keeps on saying it, but most people do not follow it, which is why I've decided to mention this in the video too. How do you know that if you buy right now, it will be at a good price? Well, when you go to Google and you look up the stock of the particular company that you want to buy shares of, just change the preferences on that graph to show you the price chart for the last 10 or 20 years. Okay, at the very least you should be able to get a price chart of the last 5 years. Now figure out where the current price is. Is it near the top of that range, or is it at the bottom of that range? Okay, so let's assume that in the last 20 years the stock of a certain company, XYZ company, has moved anywhere between $20 to $50 per share. Okay, but today when you look at it, you see that the stock is sitting at $26, which means that it is at the lower range, which means that if you buy right now, assuming everything else is okay, you will be buying at a very decent price. Now, on the other hand, if it was at 48, you would know that it's at the higher end of the range, and you're probably buying something which is overpriced. So don't do it, or wait for a better time. Okay? The third thing that we need to understand is one of my favorite tools. Okay, it's a website actually. It is dripinvesting.org. It's a totally free resource. I've been using it for the last 2 years, and when you go to that website, it will show you a list of dividend champions, which is stocks in US or Canada or the UK, which have been handing out dividends for the last 25 to 50 years consistently without a break in between. Okay, and they have done all the research for you, so you don't even have to do the research, right? You don't have to do anything like that, which means that all you have to do is go to dripinvesting.org and go into the right section. If you're in Canada, go to the Canadian section. If you're in the US or the UK, go to your particular section and look at the stocks, because every single stock mentioned over there has been paying out, the company has been paying out dividends for the last, I don't know, anywhere between 5 to 50 years. So depending on your risk tolerance, you can select whatever stock you want. Okay, can you see how easy that is? And once you do that, I would really advise you to start small. Okay, even if you have a decent budget, just create a brokerage account and play around with it for the first couple of months. Okay, buy 10 or 20 stocks. Okay, don't buy a lot at the same time, especially at the beginning. The first couple of months, take your time, understand how the platform works. I personally use Questrade, but then again, I'm in Canada. In the US, for people in the US, it's going to be different. So select the right platform, brokerage platform for you, and then slowly scale it up. That way you will understand how stocks behave, how the platform works, and you will only do whatever you are comfortable with. This is very, very important, guys. Okay, and yeah, hold long term. Okay, don't sell the stock in a couple of years, because that defeats the purpose. Okay, you're gonna get taxed, you're gonna stop the dividend income from coming in, so don't do that. You only have to make sure that you buy the right company. Okay, you buy it at a low price, and trust me, there are a lot of stocks right now at a low price. I checked dripinvesting.org a couple of days ago, and you'd be surprised how many stocks are priced low right now. And there's nothing wrong with the companies, it's just a market cycle. Sometimes people feel they get greedy, and the prices of the stocks go up, and sometimes people are fearful, they want to take money out of the stock market, and that's why the price comes down. So you don't have to care about the highs and the lows. If you buy low, hold it for the long term, and just earn the dividend income. One last thing that I forgot to mention is that at least most, if not all, of the stocks mentioned on this website, dripinvesting.org, have increasing dividends, which means that every single year that you hold on to the stock, it keeps increasing the dividend for you, which means that it indexes you for inflation, right? Whatever the inflation is, more or less the dividend payout will match that. So you don't have to worry about the dividend payout being the same but the cost of living increasing. Okay, with these kinds of dividend stocks, you don't have to worry about that at all. And yeah, as with everything, please understand that investing is a long-term thing. If you're buying something and then selling it after 2 years because the price went up, you are not an investor, you're a trader, right? So for investing, for you to be an actual investor, you have to hold long term. Okay, and trust me, if you hold some of these stocks for 5 or 10 years, the dividend payout every single quarter, every single month that you'll receive will be much, much higher than when you initially had bought the stock. Okay, because it keeps increasing every single year. So I guess that's pretty much it. It's pretty simple. All you have to do is figure out what works for you, and you can get started in a couple of days if you want. And as always, I hope you got a lot of value out of it. If you did, please hit the like button, and feel free to share it with your friends and family. And also, please subscribe to my YouTube channel if you haven't already, because I'm trying to get out one video every other day at least, depending on how busy I am. But for sure, I will do 2 videos every single week. So it's free information. I think it's really valuable information. And yeah, I'm only teaching things that I have personally done myself. So I really hope it helps you out. Thank you so much, and I'll talk to you soon.